That will definitely be one thing that I look for in the future to help me avoid taking losses. Hey, welcome back to the channel. So as you know, I don't need a bunch of indicators in order to trade successfully. Today, I'm going to walk you through real trades. I'm going to recap July 13th through July 17th, and I'm going to show you how simple can beat complicated every time. If you've been trading for a while, you probably did what I did early on. You stack a bunch of indicators together, you hop strategies every time you have a red week, and you probably tell yourself that the missing piece is a setup you just haven't found yet. So here's the thing, that's not a strategy problem, that's a process problem. Most traders aren't actually taught how to think through a trade. Most traders are just taught setups, and setup framework can just turn into noise. So let's jump into this. Okay, so we get into the trade recap. What we're going to do here is just cover the strategy very. If you're already very familiar with it, this is a refresher. Otherwise, you can just skip forward for about a minute. But go to the 30-minute chart, wait for 10 a.m. Once 10 a.m. hits, you're going to mark the high and the low of that first 30-minute candle. That's this candle right here is your opening range. That's your 30-minute opening range. Now you're going to wait for a 10-minute candle to close outside of this range. This is the same thing. This is your 30-minute chart, but the first 3 10-minute candles. Okay, so you understand how this looks. You get a lot of questions about this. Wait for a 10-minute candle to close outside of this area with strength. This candle doesn't count. Does that look like a strong candle to anybody? Of course not, right? You're still inside the prior one. You can see that we wicked below this low wick, yada, yada, doesn't look strong. Now we're going to get a lower high here confirmed. At this point in the day on Monday, you now have a confirmed lower high right here, and we are closing underneath the orb low range. We can now look, after this candle is closed, which would be at 1340, we can now look for a 2-minute 20 EMA interaction. Right here, we interact with the 2-minute 20. We touch it, and then we reject. What I teach, the easiest and the most simplest part of this process, is to enter on the open of the next candle. So you wait for that candle to close. Many traders are awful at timing, and if you try to time entries in the wicks or be predictive with the price action before letting the candles close, it's going to impact your trading, and for most people, it impacts them negatively. As the saying goes, wicks do the damage, bodies tell the story. You only get the body when the candle closes. So now that the candle is closed, you can look to take your entry. So you enter at the open of the next candle, and your stop is about 25 points, and your target is low of day, which is 55 points. This is greater than 2-to-1. I know somebody will already ask, hey, would in the real you say you do this or use the prior candles higher or whatever? Yes, that often works too. But one thing with MNQ is it's very volatile, and it is best to give yourself more breathing room, right? So a minimum of a 25-point stop helps to ensure you're not going to get a false wick out, that you're not going to just have your trade taken out before you have to watch it work. This means that if you size down and allow for that greater risk, you're going to have a higher likelihood of hitting those targets most of the time. Let's go on to Tuesday. I've put together a PDF with this exact strategy. The opening range and the 20 EMA pullback framework. The rules, the risk model, the link is in the description box below. Grab it, it's free, and it walks you through the entire process. So if you're looking at the screen now, you can see that I have levels automatically marked. If you like this indicator, it will be in the description box down below. Basically, it'll plot out your pre-market high, low, previous day high and low, your close, your opening print, and your orb. So you don't have to plot out anything, okay? It's going to do it for you, and when you're looking at different tickers, it makes it a whole lot easier. But for those of you who are trading only 1 or 2 instruments, I encourage you to draw out the box for the range so that you can see exactly where it is. You know what's going on, and you can be a more active participant in the market, as that's the best way to learn. In a CPI day, this was a little bit more of a frustrating and challenging day. I did mark out that this level here is just a pivot in pre-market preceding CPI, and it's an hourly low pivot. We broke this hourly low, and then we started to pull back up towards the orb. While we had respect of the 2-minute 20, we put in 2 really strong candles here on the 2-minute chart, and there really wasn't enough that confirmed to me that sellers were stepping back in decisively. I honestly made the mistake of not taking into account that this wick down here on the bottom of this 10-minute candle was greater than 50% of the total candle, and it really just indicated that the buyers at that point in time were too strong, and this is not what I would define as a strong candle closing underneath the orb. Although this first candle was fine, considering the size of it, if we had pulled back into the 2-minute 20 EMA up in here, I would have definitely considered the trade and taken it. At point, we've already tried to move another candle lower, broken an hourly pivot, put in this huge wick, and then I thought that I was getting swiped out of the trade here, got swiped out for the stop, took the stop, and then ended up re-entering and taking it again, only as you can see to get, right? So neither one of these trades should have taken place based just of a systematic viewpoint, right? That wick is too strong. This is showing you too much. The pivot's already broken. There is not a trade here. That's on me, and I think every great trader needs to be able to admit when they make a trading mistake, because no one is perfect. I am not perfect. I made mistakes trading down here. And then when we had this swift rejection candle, like this 2 minute, I'm gonna delete this so you can see it. This 2 minute candle right here, I thought, hey, okay, swiped it up. That was just a swipe. I'm gonna enter and short the next one. It actually started to work in my favor pretty quickly, and then I end up getting stopped again. Bit of a frustrating experience there off the lows, and then I don't do anything. I wait until we move higher. So now we close the 10-minute candle outside of the orb high with strength. I wait for a 2-minute 20 EMA interaction, which we get right here. I entered in right here with my stop below this pivot low, a little bit tighter than 25 points. And my target was the high. After I entered, I realized that we had already swept the high of this candle, and that was likely we were going to come down and sweep the low of this candle. So I actually trimmed something for profit, and I moved to break even, and that was a very, very smart decision and a quick read on the market, because boom, I would have gotten a stop. I would have taken a full stop. I have this here as an illustration. It tries to reclaim, and it's really just another lower high. And if you just went off of that as it's trying to reclaim it, and you have the long wick and they're holding above the opening range and yada yada, just wouldn't have worked out. That's a trade not to take. Overall, what I taking away from this experience in CPI is keep in mind the wicks. Keep in mind when a candle sweeps the high before coming back down, or sweeps the low before, candle sweeps below this low before coming back up, it's likely to go to the other end of the range and go and complete the full engulfing, as these ones did. But ultimately, these are not trades to take because they're inside of the CPI candle. We're back inside the CPI candle when I first tried that short, right here. We're back inside of it. And then here, we're still inside of it. When we are inside that CPI 10 to 30 minute candle, if we are not making any decisive moves, I'm not going to take any trades next time. So CPI, just as far as this strategy goes, I won't be looking for these types of trades where I'm looking for a breakout and then a base to continue on, because that's ultimately what this strategy is. It's a breakout, retest, and continuation. Right, and it's just very simply defined with very simple criteria as to what to look for. Let's move on to Wednesday. If this kind of breakdown is useful, walking through real trades, not just a highlight reel, hit the subscribe button. I post these regularly, and I'd rather show you the real deal versus a made-up highlight. You can see that you have quite a big orb range. Here's your orb high, here's your orb low. So we are inside the orb range. Wait for a 10-minute candle to close outside of that range with strength. All right, there we go. So a 10-minute candle has closed outside of that range with strength. Now we're going to stay focused on the 2-minute time frame while watching the 10, making sure we understand what the wicks are doing and all that stuff. Now watch. We've broken previous day low. Key pivot has been broken. Watching for an interaction. You want to make sure the sellers are staying strong. There's no entry there yet. Okay. I took this trade live. For anybody who's just like, oh, does Joe trade live? Is this real? Blah, blah. Took this exact trade live. Like, said it, there's no entry here. We closed back down below, said, okay, here we go. This fits the criteria perfectly. I am entering, targeting low of day, 5 minutes. This trade played out in 5 minutes, 96 points profit in 5 minutes at over a 3-to-1 RR. So that's it. You don't need more than one setup. You don't need more than one trade a day. That's perfect. Let's move on to Thursday. Thursday, an interesting day. You can see put in the orb low, put in the orb high, right? We first made a wick higher, we moved lower, we wicked down here, we pushed up. All right, now we're inside the orb range. We were waiting for what? We're waiting for a 10-minute candle to close outside of that range. Nothing. 10-minute candle closes under. They're getting there. Still no strong candle closes, right? Look at this mess. So now we've broken low of day. You have a very strong candle closing underneath the orb low. Right? I mean, that 10-minute, in those 10 minutes, bears are decisively in control. There is no doubt about it. Wait for our setup. Okay. Here, interacts with a 2-minute 20 EMA there. The candle closes. This is your entry at the open of the next candle. If you want to try to adjust this strategy and try to target an entry even higher, that's great. But waiting for price to go more in your favor skews your risk reward negatively. For some of you free members in my Discord watching this, I have seen some of the entries you are posting, and you are chasing entries after a ton of confirmation. You are waiting not only for this interaction, and then you're down here, where smart sellers who sold up here are covering and you are buying from them. Okay, so you want to have a repeatable system of knowing when to get in the trade. It is not down here to short. Trade from the time of entry at 1446 took you 20 minutes. And in that 20 minutes, you got 36 points in profit. Pretty simple and repeatable trade. Here we are on Friday. 10-minute candle closes decisively outside of that range. You have no doubt that bulls are in control. Wait for a 2-minute 20 EMA interaction. Here is your 2-minute 20 EMA interaction. I'm zooming way in on purpose. The 2-minute candle wick through the 20 EMA and closed where? Back above. That is an entry trigger. You enter on the open of the very next candle right there. Okay? That's the strategy is. With a 25-point stop, you can see you're more than halfway to target on the first 2-minute candle. At this point, you're closing in, and there you have it. In 6 minutes, you collect 108 points in profit. Now let's go through the numbers. Now, before we go through the numbers, I want to point out the next trade that failed and why this is not a trade. So here we've broken through the high range, right? We've broken over what's called the initial balance. The initial balance is the first 60 minutes of price action that occurs between 9:30 a.m. and 10:30 a.m. Eastern time. When we break over that decisively like this, but immediately wick a little bit higher and then reject and put in two massive candles like this, you can see that the momentum is shifting. And just because we are again interacting with that 2-minute 20 does not mean you immediately have another setup. In an ideal world, what I would actually be thinking is we are likely to come down here and at least break this area. And until this area is interacted with, that's not a trade to take. Now you see we've broken back below, but we barely closed back above that 20 EMA, and you have a definitive lower high sitting in front of you, and it continues to go lower. There's another lower high, and you go lower. These are some of the nuanced things that I cover live when I'm trading. If you want to see this stuff live, not just in a recorded video, but in real time with real voice guidance, that's what I'm doing every day inside of the Vulcan trading community. It's not a signals group, and it's not about copying my trades. It's about building the same decision-making process for yourself in a small, focused group with actual feedback, so you're not stuck consuming content with no one checking your work. The link is below if you want to check it out. But either way, grab the free PDF. Let's review the trade data for this week. Utilizing a systematic approach, we use one trade per day, and we eliminate the anomalies for CPI day, and not taking every single trade that's presented because there is other factors that need to be considered, like the market structure. These are the types of things that go over live. Remember that. So it's another reason why you want to join the Vulcan trading community. You can listen to real live voice guidance. Let's review this. 4 wins. You won on Monday, Wednesday, Thursday, and Friday. So that's 80%. From the 4 wins, you would have collected 300 points on MNQ if you traded one contract. And if you only had one contract, you would have lost 25 points, meaning that your net P&L before commissions would have been 275 points on MNQ, or approximately $550. That's the recap for this prior week. So if you have any questions, hit me up down below. I'd appreciate you for watching as always, and I'll catch you next time.